Okay, so this is the first time that we're starting to see a little bit more red on BTC in terms of what we've been used to over the past kind of 10 days or so, a little bit longer. And realistically, I think that this probably sets up for just a market environment where BTC maybe chops a little bit more. And I'll do the classic thing where I say, well, I think there's probably two outcomes here. I think we either go sideways or we carry on to an extra high. But as it stands here, this is a lower time frame range that I think that we could get some play out for BTC on. We've got the low that was created over here, which was just on the 12th. And then we've got the high that was created on the 13th here. And then what we've got is the midpoint of this potential, because this is still very early, this potential lower time frame range, and this midpoint dropping around that 89,000 mark, which we've seen from this lower time frame cluster was a significant level for us to push through before we finally got this breakout. And obviously the market turned today. Some markets were green, ended up giving that back. BTC red on the day, more significantly red than it's been the last couple of days, and divergence across the highs here as well. Now, that's going to kind of bring me into the second part of where I'm going to hedge the thought process around this range. Like I said, this is still very early to be mapping this out, and given what we have currently on the AO here, we could absolutely support something that did this and ended up taking this high and then coming back down to this low down here. Right, so that's what I'm looking for right now. I think market condition-wise, which is really what I wanted to speak about on here, because I think that typically speaking, the market and the sentiment in general has been very positive. I think that there's been a lot of sidelined participants or non-participants during this run that we've seen. I think that the alt markets have decided to move and show their strength, and what we've seen over the last probably kind of like 72 hours or so is that individually markets have been significantly outperforming. So we've seen basically the listings of meme coins being a good catalyst for other memes to pop off, and some of them followed by their own news of listings as well. So we started to see an increase in kind of the listing side of things and the listing plays across the space. And I think that usually that little patch, especially when BTC slows down or at least has weaker market conditions than we have been experiencing, it's a pretty good time to kind of take stock of where we are during this run up. And when it comes to overall thought process, I keep on going on Twitter about the fact that this has been an 8-month consolidation and now we're seeing this breakout. And so I don't believe we're near the end of whatever is to come for us. I think that is probably still months away. I hope it's months away. But what we see locally in lower time frame is when we start to get those markets individually moving, when we don't yet necessarily see universal strength where everything's moving in alignment. Very often it's because of the situation on BTC, and that impact and that correction is therefore going to spread out and impact the other markets as well. So for now on BTC, I'd be looking down here at this low at 85,000, see if this lower time frame low is going to go. Any retest back into 89,000 and clear breaks back above may signal that we may indeed get that next drive towards this kind of 94, 95K region here. But on the downside, we want to protect 85 if the lower time frame kind of range that I've established very quickly here is one that's going to be kind of respected. Lower time frame chop for us through here is probably one of the more beneficial scenarios that we get now for BTC. Across the market, we've seen markets tied with BTC or the majors start to dip down. We've seen crypto equities start to correct and come back down. You know, Coinbase up 60% in 10 days and starting to get that correction now back down towards the 270s. And we're starting to see that cool off from the strength that we had during the initial blast following the election. I think that's a positive thing for the market. I think that based on where we've been and how we've traded so far, I think a lot of the market would welcome the pullbacks, and I think that it's probably healthy for the trending market in order to catch some of that. And then also, you know, kind of the point with this on this side of things, and something back in 21 that's really important here, again, you know, higher time frame perspective, are areas like this. You know, this is still bull market price action, but trading this doesn't feel like bull market price action. Okay, so you can get these clusters, and this was a patch that we went through October, November, and then finally broke clear again in December. And so we get these patches. we get these patches. This is a particularly long patch. This is kind of, 35 days or so where we just grinded upwards, but with lots of volatility back and forth, and actually intraday candles that weren't doing a huge amount. And when we look back at a region like BTC, like we see up here, we could absolutely be developing something like that. It really is too early to, start doing any crazy analysis on where we are based on the fact that this has now spent 4 days sitting in price discovery and still a lot to be determined and understood by what's going to be the next move on this. All right, lower time frame, set out some rough boundaries where I hope that we'll trade between, and then we'll see the reaction from there. I think that ETH is probably one of the markets in a really interesting shape as well, because I was spectacularly wrong on the ETH weakness. It was the market that I hedged my BTC exposure against, and ETH obviously picked up in the wake of the elections and stopped out on the hedge position, and then ETH rallied straight through the 2900s, which I thought might prove a bit of a resistance blocker for it, and then just traded straight up to 3400. It was kind of like no pullback territory, and we're immediately going to show, I don't know if you know it's wise to call it strength. We're gonna do a little bit catch-up play on ETH, right? That's basically what the market pulled through here. And this zone here, although it's wide, it covers $100 of price action through here. I think that this is roughly the zone that we should be looking at in terms of ETH trading back into. Again, I think that's going to happen if BTC gets that further correction. We've already seen today that the sell-off on the ETH side of things was slightly more impactful, which we've come to expect, than it was on BTC. And anything that moves back down sub 2900, I think, is going to be kind of that sweet spot for us. It's been a really good area of support previously, all the way through the summer. It was a very good area in terms of support. And then this area through here, we were capped at 2750. That's basically where we spent this time from August all the way through till November, stuck below at 2750. So somewhere around this zone feels like it's the sweet spot for potentially trying to time the ETH trade. So higher time frames as well makes a lot of sense through this region, and an area I think that we'll get a move back to, hopefully. Right? So I can redeem myself by getting some long exposure on ETH and not getting blown out on the hedge side of things. But as I said, overall market conditions I think are still really, really positive through here. Independently, some markets been very, very strong. We see markets like Bonk popping off. We've seen stuff like DOGE continuing its position of strength in the market and continuing to accelerate. We've seen WIF starting to move with listing news, although it has undone the majority of that listing candle now. We're still seeing a lot of markets independently with a lot of strength. And I think that will be the theme that we'll come to expect over the coming weeks and months, where I think this landscape is changing. I think that the landscape that we've got here in terms of the coins that we're looking at is changing. I think with the way that the cabinet's lining up in the US and everything that we hopefully will come to see in 2025 and beyond, I think this is all kind of the prelude price action to what's going to happen through that region. So as it stands for me, this 8-month consolidation and breakout is by far the best signal we've had on BTC in months and months and months. Right? And that strength that we've seen to the upside, that clearance of the all-time highs, that price discovery push and continuation at this early interval, I think they're all really positive signs for where we will go. But something that I commented on the thread on Twitter, which is, when we get moves like this and we get areas that start to chop, consolidate, slow down a little bit, we don't get that clean trend. We start to chop and be more aggressive. If you take the price action that we've got on BTC and you look at this area here, and then you compare it to what we've done in the days since, right, there's a change in the market character here. So just very quickly, just eyeballing this, we can see there's a change to what's going on in terms of the structure of this market here. We're starting to see the presence of far bigger red candles. We're starting to see far more back and forth price action. Okay? And even just locally here, we're starting to chop around a little bit more. And I suspect the last couple of days for people who haven't been focused maybe on individual alts have been harder to trade. There's probably been more round trips. There's probably been more stop outs over the last kind of 48 hours. Because these conditions are changing. Now, our mindset during these patches of time here are going to be very aggressive. Okay, we have to be in tune with the market. We have to be aggressive. Otherwise, we're going to get frozen out. Okay, and that's the way that these aggressive breaks and these aggressive trends work. You have to be able to execute and act, otherwise you're going to get frozen out and you have to sit on the sidelines. Now, the downside to sitting on the sidelines, apart from not making money, is that these areas that then develop force you into the market. And they force you into the market at the worst possible times. Because now you're starting to see dips, you're starting to see red candles. You were told during this run that that's what you should be buying. But now that you're buying them, you're starting to get chopped up a lot more in these kind of local areas. So what we have to try and do is to try and chill things out. Now that really is speaking to BTC. Right? That's like if you're actively trading BTC or the majors, I think it's a case of trying to slow things down, understanding that, yes, you have to be aggressive in these conditions, but it's aggression at the right times in these conditions. There's still a timing element involved to it, and it's during these areas that we really want to show that aggression and be active in the market. During this, when we potentially start to see that area of chop developing, or at least harder conditions for executing for immediate continuation to the upside, changes things a little bit. Now, of course, I kind of localize that to BTC because independently, there are all these markets that are starting to have their own legs. They're starting to move a little bit more freely, a little bit more independently. You can already see that today, even recording this 20 minutes after the open, DOGE has moved to 3.5% green on the day. So we're starting to see that movement back in. Volatility is still high in this market. It's just not necessarily volatility that's sticking the upside anymore. Now, individually, sure, you can find opportunities to trade. Sure, you might find markets that are going to benefit from BTC chopping around, maybe a little bit of downside that's under control, nothing too dramatic. So there's still going to be opportunity here. But from a BTC perspective and like a wider trading perspective, I think that now is a really good opportunity to kind of think about what levels on the downside you would look for on whatever markets are your markets of selection, and start thinking about how it's possible to position into those. And what does it look like to be a buyer in those markets? How do you position for that? What are your expectations for that? What does scaling in look like? What are levels of interest? What setups do you have to see presented in order to take position in the market? For me, like, all of those questions are far more important at this stage in time versus trying to get involved in this with the expectation of immediate continuation to the upside. A lot of markets have pushed incredibly aggressively. Like, it's not outrageous or beyond what's being said that, you know, you can anticipate some form of correction or continuation to the downside here in order to stabilize, cool off, whatever you want to call it. And so for me, the greatest importance right now is really market identification, focusing on the areas you want to focus on, and then making sure that you can kind of deliver on that should the conditions allow you to enter based on what you've set out and what you've planned for. But this is an 8-month breakout. This is moving into the most pro-crypto position we've been in globally, with news sitting in the US. And for me, this is still the start of what will hopefully be this incredible journey over the next few months of crypto rise. When we're obsessed on the lower time frame, when we're spending all day checking the charts, and especially in the current conditions when the emotion's higher, the feelings ramp up, there's more money to be made, okay, that's when we start to overanalyze during these periods. And so I think taking a step back, just acknowledging what we've done already and why maybe chop a little bit more downside is like not an outrageous thing to be suggesting or having the thought process of here. So planning is kind of key for me and top of the list right now.